welcome to Investor Guide Budget 2025 Special. This is going to be an interesting one because not only our speaker is interesting, but our audience is also absolutely interesting, who's actually wanting to know what should we do from here on. Welcome Saurabh Mukherjea, founder and CIO at Marcellus Investment Managers. Along with him, we also have the students of NMIMS Students College in Mumbai and our very own researchers at NDTV Profit. Guys, you're getting a great opportunity to be a part of this conversation with Saurabh because he himself has started his journey without knowing anything about equities, and this was in his 20s as well. So I'm sure you're going to be able to connect with him very quickly. Saurabh, first thing, we are just around the budget. The key that everyone wants to know is how is investing ahead of the budget different from regular investing?
I think, look, all event-based investing, whether it's monsoons, budgets, elections, all event-based investing is inherently risky because you've got a certain take on the event. So some people watching this might say that I feel the budget will be expansionary, right? And that sort of investing is very risky because making a right call on a specific event, whether it's monsoons, elections or budget, is very tough. So I would urge those watching to use the budget to understand the state of the country. For youngsters like this, it's a great opportunity to learn about how the economy actually functions, but wouldn't recommend trading around the budget, shorting the market, buying stocks, selling stocks around the budget. That's sort of, if you want to do that as a hobby. Don't do that with an expectation of making money. But
with everything said and done, when you say that do it as a hobby as well, do you think it could be a learning experience where a new-time trader, a new-time investor, I would say, would be able to limit their losses to an extent when they know, okay, this is the money that I'm going to allocate, this is what I'm going to learn out of it, and probably if I lose this, I shouldn't be crying over spilt milk then.
So the only challenge with trying to learn investing through through events like the budget is there are so many moving parts inside the budget. Even if you make money on the back of it, you've got no idea whether you made money because you read the budget right or because something else happened in the world that day to make you go right. So I stress again, event-based investing is difficult, it's risky. If you want to do it as a hobby, consider doing it, but as making money out of specific events like the budget or the monsoons, in my 20 years of being in markets, I haven't seen too many people do it. But that said, it's a great opportunity to learn about the country and about the economy.
So what should an investor do, and to make the most of the budget, how should he or she navigate from here on? Because clearly when you talk about not looking at investing, taking specific events into consideration, but all of these events hold a lot of importance when it comes to markets, right?
Sure.
So to look at an event, take for example, you're talking about the budget now. You had Trump 2.0, which has come at play as well. You've spoken about Modi 3.0 as well, but everyone has been looking at these events very closely. So what should that perspective be then?
So I'll give a very simple framework to think about long-term investing and the budget being one of the items in a long-term investing framework. So one of the most rudimentary things we learn when we begin our investing career is, जब economy down cycle में जाती है, when the going gets tough for the economy, think about defensive, in inverted commas, sectors like IT, pharma, FMCG, right? That's kind of investing 101 in any country. In a down cycle, think about IT, pharma, FMCG. Now, either basis you're reading of the newspapers or watching NDTV, a viewer might have formed an impression that the economy indeed, after three good years, F22, 23, 24, the Indian economy has entered a cyclical downturn, right? So that's a mental model you build. If you tell yourself you've entered a cyclical downturn, it makes sense to buy IT stocks, pharma stocks, FMCG, even I'm not 100% sure, but high quality banks would be my third area, IT, pharma, high quality banks. Now, so my hypothesis is economy thandi ho rahi hai, down cycle mein ja rahi hai. The budget is an occasion for me, is an event for me where I can either get my thesis validated. The FM will talk about both tax collections and her hope for tax collections for the year ahead. She'll have to give some economic commentary. There will be the economic survey published the day before the budget. All of that gives me information on, is my perception that the economy is in a down cycle, is that perception correct? If it is, it gives me greater confidence that I'm on the right track by buying IT stocks, high quality banks and pharma stocks in bulk over the last 3-4 months, right? I'm not expecting to make a ton of money on the back of the budget, but I have a mental model of the economy, and the budget gives me information on, is my mental model correct, or have I got my thinking awry about where India is going?
Right. So that's the way you should be looking at the markets whilst reading the budget. Ahead of the budget now, with what's happening in the markets, you've seen a significant correction that's already coming in after the upcycle of the last 4 years. And this is something which is warranted, right? You cannot avoid a down cycle in the markets. How do you tread from these kind of events? And do you think these opportunities should be used to invest in markets and pick pockets of growth or pick pockets of value?
Right. So I think economic upcycle and down cycle are like summer and winter. You don't get worked up because the economy is going down, just like you don't get worked up because summer is ending and winter is coming, right? What you try to do is make money through the cycle. And as we were discussing, a simple framework is, as we go into tougher economic circumstances, which could last for 1.5 years, you load up on sectors which are more export-oriented. IT being a classic export-oriented sector, pharma being an export-oriented sector, and in my case, I've chosen high-quality banks because high-quality banks had a rough time in the post-COVID rally, and I think their time has now come. Now, over and above that, there's another way to think about this, right? India and America are the world's best performing markets over the last 10 and 20 years. These are the only two markets which have given double-digit dollar returns over 10 and 20 years. But the even better news is not only are these the world's two best markets, these markets have very little correlation with each other, right? So when India struggles, America does well. When America struggles, India does well. And therefore, if you're able to build a portfolio which is, say, half India, half America, it actually gives you much better chance of generating superior long-term returns, right? Just to use 2024 as an example, calendar 24, our market struggled, the Americans did well. I think over the next couple of years, the Indian market is likely to have a tougher time. Over the next couple of years, the American market is likely to have a happier time. So as we go into an economic down cycle, other than buying export-oriented sectors like IT and pharma, it's also worth figuring out, how can I invest abroad? In our case, 2 years ago, we started investing abroad through a portfolio that we opened in Gift City. Our team in Gift City invests into America and Europe. And we think that's a great opportunity to consider, right? The rupee is giving up value to the dollar at roughly 3 to 4% per annum since 91.
Correct.
And that naturally means that if you earn, say, 15% in dollars, it becomes more like 18-19% in rupees, right?
Terms.
So beyond looking at export-oriented sectors, in the Indian stock market itself, consider taking a sort of mental flight into America and look at companies, not just the Magnificent Seven, not just Amazon, Microsoft, but go down the batting order and look at high-quality American manufacturing companies. Gift City makes that very easy for all of us to do.
And I think with Trump 2.0 as well, where he's clearly indicating that he wants to make US the manufacturing hub, and is talking about tariffs, that either you're manufacturing in the US or look at tariffs. That's going to be interesting. But let's also get in all our students who might have questions on this aspect of the budget, as well as Trump 2.0. Let's go with, who has the mic over here? Yes, you can take the first one. Introduce yourself and you can take the first question.
So I'm Harish Sarda, and I'm an MBA student at MMIS Mumbai. So, crude oil is one of the largest imports in India. So, in the vision of Viksit Bharat, so how would replacing a significant portion of oil imports with renewable energy or with domestically produced ethanol contribute to the balance of payment equation or the economic growth?
Yeah. So look, lovely question. I think one of the beauties of our country is because services is 60% of GDP, and services grows much faster than the broader economy. Okay? Services is the largest part of the economy, and it grows much faster than the economy. And because services is not particularly energy consumptive, right? To run an IT services company, you don't need a lot of oil, right? That's meant that India's oil import bill, as a percentage of GDP, has actually steadily come down over the last decade. I remember 10, 15 years ago, it was around 13% of GDP. It's now 7-8% of GDP. So my reckoning is, given that it's highly likely that services will be the leading part of our economy, and highly likely that the services sector will grow faster than the broader economy. I think as it is, this is a natural construct of the economy, will reduce the energy bill as a percentage of GDP. So I'm not in that camp which aggressively wants the government to give subsidies and do chilnana baji to promote alternative fuels. I think the natural construct of our economy actually is one that reduces the importance of fossil fuels, because we are largely a services-oriented economy, and our services sector is actually very competitive, world-class. All of you probably would have heard about global capability centers, right? So Microsoft, Google, Wells Fargo, JP Morgan, all of these firms employ lakhs of people in India. So every week, 3 new global capability centers are opening, creating 30,000, 40,000 jobs, right? So the entire world's office work is coming to India, which is great news, because that sort of office work is lucrative work, अच्छे salaries हैं, good salaries, and it doesn't need a lot of energy consumption. So I think there's plenty for the government to do. It's a very tight, tough fiscal situation for the government. I think the tax dollars are better spent in stimulating the economy in other means rather than worrying about the energy transition. Not least because Trump himself has said, immortal words from the US president, drill baby drill, right? So the US president is saying drill baby drill, and we are here jumping up and down about methanol. थोड़ा सा odd लगेगा.
Yeah.
Hi sir, I'm Juisha Gandhi.
Hi there.
So what you said about drilling down, using that only, the agriculture is other basis of rural consumption in India is one of the key drivers, right? So sir, how do you think this budget will focus on increasing financial access to rural communities, or in general credit access to most of MSMEs or marginalized communities?
Superb question. So this is let's now use this to contextualize why the budget is so good. So if you read India's income tax data, right? It's freely available, income tax data. I would strongly recommend everybody goes to the government websites and understands how the income tax data works. Those earning between 5 lakhs per annum to 1 crore per annum, right? They pay 75% of India's income taxes. But that's only 4 crore people, right? Just 4 crore people pay 75% of the income taxes. And where do those income taxes go? They go to those who earn less than 5 crores. 80% of India's population earns less than 5 crores, the folks you mentioned. They are the big vote banks for our political class, right? And I think the message that the political class has taken on board over the last 12 months is that percentage of the population, those people who are below 5 crores, are really the only politically relevant people, right? We have 64 crore voters in India, out of which 4 crore are in that middle class segment. So you can see politically it's really irrelevant. The income tax paying population, they pay taxes, people like us, but politically we really don't matter. The people who matter are the people you mentioned. So my reading is the next 4 or 5 years, across political parties, there'll be a rush to give goodies, freebies, rebates, subsidies, doles to people below 5 lakhs. I think this budget will have some of it. Obviously, as we approach the 2029 general elections, that will ramp up. And as an investor, and this is why budgets are useful to learn, right? Not because of you want to trade on the budget. As an investor, you start building a mental model कि सरकार गरीब को पैसा बांटेगी, and what stocks can I buy? कहाँ पे निवेश करूँ जिससे मेरी कमाई हो? That I can earn on the back of the government being generous to the poor, because they are the only people who politically matter, right? So lovely thing. That's exactly how you need to start strategizing around the budget. हाँ जी, आप चूज कीजिए.
I'm Muskan. I'm from NMIS Mumbai. My question is that government has a goal of Viksit Bharat by 2047, and infrastructure investment plays a major role in that. Last year we saw in budget there was an investment of 11 lakh crores going into the budget. What are your expectation out of the budget this year, and what do you think is an ideal amount that is required for India given the roadmap ahead?
Right. By the way, I should say at Marcellus we are big NMIS fans. We've got several NRC1G people in
Yes, NMIMS. Yes, it's a tongue twister.
So I think you have to be practiced on that, right? So we have several NRC1G people in our office, and you guys are clearly very well prepared for this, and I'm happy that historically Marcellus has recruited from NRC1G. But coming to your question, right? I think infrastructure investing के लिए पैसा निकालना will be really tough for the government. So let's again do some basic math. Nominal GDP. Right, this is real GDP plus inflation.
Yeah.
is going to grow at max at 10-11%. Okay? So nominal GDP will grow at 10-11%. The government has been very clear, they want to reduce the budget deficit. Abhi 4.9 is F25 mein 4.9 ke aaspaas aayega. They are probably going to try to get it down to 4.4, 4.5. Now, if they want to reduce the budget deficit, total government spending will be growing less than 10%, right? If your GDP is going to grow at 10 and you want to reduce the ratio, तो ज़ाहिर है आपका total government spending is going to grow less than 10. Now, if it's going to go less than 10, will you really be killing yourself to spend on infrastructure, or will you look after core vote banks, which is the 80% of the population? I think the lesson that has been learned at the general election, the 24 general election, was look after vote banks. Infrastructure spending, I think, increasingly becomes secondary, and all those in the stock market who have loaded up on infrastructure stocks, I think really need to rethink their obsession about government capex oriented stocks, because I simply can't see, given the political realities of India, I simply can't see where the government will find the money to spend on infra, given that critical vote banks have clearly shown that if you do Ladki Behan, you get immediate political dividends, right?
But Saurabh, to this point, I'll come in over here is, as much as the vote bank is important,
yeah,
I think the money making process for your population is also important, right?
Right.
And a lot of people are becoming dependent on the stock markets for the same. To that, if you are talking about, okay, an infrastructure spend does not mean it's only one avenue. There are multiple avenues where the government has to look at in terms of infrastructure spend. This financial year itself, there has been a delay. They've not been able to meet that number because of elections. They've not met the guidance at all, right? The ambition is, or probably the expectation is, that FY26 mein aayega.
I think paisa nahi hai. So I agree with you, people are thinking like that, but those are the people who don't understand the fiscal and political process. Paisa nahi hai, and that's why I turn to the youngsters again and say, if you do the fiscal math, 10% nominal GDP growth, government wants to fiscally consolidate. Remember, they have to fiscally consolidate in the 2 years immediately after the general election. नहीं तो जब approach करेंगे 2029, पैसा नहीं होगा, right? So जाहिर है, it has to be the case that the first 2 budgets after the general election, July 2024 and Feb 25, these are bound to be consolidating budgets. तो अगर आपकी total tax rate 10% से grow करेगी, right? This year, remember, it's growing at 8. Assume कीजिए अगले साल the tax rate grows at 10, and you want to reduce the deficit, your overall spending can grow at, say, 5. In that context, where will you find money to spend on infrastructure, right? And again, reflecting back on election results, right? Remember, politicians are incredibly smart people, right? They look at election results like, say, we look at our portfolio performance and they say, where did we screw up? What can we course correct? I think the big course correction will be on infra. I think there'll be a far greater focus on benefits for the poor. With regards to the point about the stock market is a big source of earnings, right? It feels like that, right? But again, आप RBI का data देखिए, the RBI has published several times said in the last 6 months, the RBI has said several times in the last 6 months that net household savings, net matlab household savings less household borrowing, is at its lowest level since 1977, right? So it's not even evident that stock market में चिल्लाना बाजी से a lot of money has been made for the middle class. The poor obviously are not going to be the big participants. The middle class are the big participants. But given that the RBI data is so emphatic that net household savings are at the lowest rate since 77, the benefits of the stock market boom, I think, are more likely gone to a concentrated economic elite. In fact, 3 days ago, the Unilever CEO said that in urban areas, debt levels are so high in urban areas that people are having trouble buying FMCG items, right? So it's relatively clear that the middle class is in a tough financial position. But as I said, that's not the core vote bank. The core vote bank are people below 5 lakhs. And recent elections in multiple states have shown that there is a recipe to win votes from them. And I think our politicians are smart people. They'll follow that recipe.
Right. So I think the strategy with regards to investing clearly needs to change from what is expected versus what people are looking at.
That's exactly what the economic cycle does, right? As the economic cycle changes, you go away from, say, public sector capex plays. When the economy is thriving, government has plenty of money, public sector capex plays work, right? I missed out, we at Marcellus missed out because we don't invest in public sector companies. But as the economy slows down, naturally the government has less money Usually economic slowdowns also make the going tough for politicians. And naturally, when the going is tough for politicians, they turn to gratifying their vote banks. And therefore, if you change your tack and say that in a slowing economy, I'll focus on export wala investing, IT, pharma, and then within domestic investing, I'll focus on stuff that the poor buy. So in our case, over the last 12 months, we have bought companies which make tractors, we've bought companies which make fertilizers and pesticides, because we think the big focus will be revving up non-urban India. That's where the power and the votes lie.
Saurabh, let's pick it up from where we left before the break. You're talking about rural India, positive in terms of tractors. How are you then looking at consumption as a pack? Because we're talking about a slowdown in consumption, where there has been a slight pickup in terms of rural India, but urban is absolutely something that even the companies are worried about.
Yeah.
So how do you link consumption to rural India and tie that together now?
No, you're right. It's very difficult to find consumption plays which only sell to rural. So far we've done tractors, we bought Escorts Kubota, and we've done pesticides, fungicides. So we bought a conglomerate called Godrej Agrovet. Godrej Agrovet has some ice creams and milk and pesticides, fungicides, animal feed, so cattle feed, fish feed, and it also has oil palm. So we thought, let's do multiple rural plays too. Godrej Agrovet. You're right, the consumption piece is tricky, right? And one part of what we have tried to do is see if dairy, paneer, ghee, ice cream is a place. So after doing lots of rural traveling in South India, we ended up buying Dodla Dairy around 6 months ago. So that's our main, in inverted commas, consumption play. But clearly, if urban is slowing, as all the FMCG companies are saying, is urban is slowing, perhaps that will also impact Dodla. So the consumption piece, I agree, is tough, because there's no company which only sells specifically to rural, but the tractors and pesticides, fungicides play, cattle feed, animal feed, we thought was straightforward, and hence in our portfolios we have Escorts Kubota and Godrej Agrovet. I stress I'm invested in the same portfolios, and so are my parents.
So, but you know, the other key theme with consumption, what happens is everyone's talking about bite-sized. In fact, they're saying that there is a major push where all of these FMCG companies are saying, we are going to sell smaller packs. But that is not what is giving them the bottom line. That's only giving them the top line. Volumes are coming from there, but value is coming only from your larger packs, right? Do you think then the strategy should be where a company has 70% exposure to bite-sized and 30% to, you know, a bigger pack, or vice versa? How should you look at that aspect on a balance sheet?
I think as soon as you see this sort of behavior from FMCG companies, you know they're under the pump. And given where valuations are on the FMCG companies, I think caution is warranted, given, especially since they're being very vocal that they're under the pump, right? So ऐसा नहीं कि वो छुपा रहे हैं. So my suggestion would be just go light on consumption, especially middle class consumption. Load up big time on export oriented companies. IT, pharma are easy ones, but there are other sectors as well. And then coming back to leaving aside rural, which we've discussed, I would say coming back to the financial system, given that this sort of outlook, right, weak middle class consumption, rising NPAs, tight liquidity, I think liquidity will tighten further. It'll help the high quality private sector banks who haven't done anything really in terms of stock price performance over the last 4 years.
Correct.
I think it'll help them shine again. We've already seen microfinance NPAs go through 10%. We've seen unsecured NPAs go through the roof, right? The RBI had to step in. We've seen credit card NPAs go through 5, 6, 7%, and they're climbing. My travels suggest credit card NPAs are going to rise quite sharply across banks. We've also seen in this result season the beginnings of two-wheeler financing mein panga.
Correct.
Right? So I've done this for 20 years, and all the red lights are going off, ding, 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 ding. And that suggests to me that NPAs across the board, across all lending categories, will soon become a pervasive challenge as we go deeper into 2025. In such circumstances, banks who've been beaten down because they were not sexy enough, I think could stage a comeback. So we are big shareholders in HDFC Bank, have been for many years. I admit we haven't made any money over the last 3 years being HDFC Bank shareholders, but the results that they've published this quarter look to be in a different planet to other banks. In a country where other banks are struggling for double-digit deposit growth, they had 16% deposit growth, and their net NPAs are an order of magnitude lower than even the other private sector banks. So when the going gets tough in
It's
banking,
the quality that comes at play.
so in
absolutely.
banking, I would say there will be a reversion to quality. I'll be astonished if there isn't. But leaving aside banking, export-oriented themes and rural-centric themes, that consumption homework exercise you've given me, we'll try our best, but it is bloody hard to find consumption plays today.
I think, staying with consumption, I think our colleague Puneet, who's in the audience as well today, has a question because he tracks the auto space pretty closely. Puneet.
Thanks for that. So just one question. You mentioned about consumption slowing down. My question was, why is it slowing down? Because we've seen the free grain scheme to 80 crores Indians, direct benefit transfers, health insurance benefit now via Ayushman Bharat. What is your assessment of slowdown in consumption? And you always write about the women economy where you have plays like Titan in stock performance, but how is that impacted also because of slowdown in consumption? And how would we track consumption coming back as well? Would you see any of the signs that you would suggest in terms of that coming back as well?
So look, let's break consumption up into below 5 lakhs, earners below 5 lakhs and people earning above 5 lakhs. Those earning below 5 lakhs had a really rough time, demon, COVID, GST, right? The informal economy getting disrupted. They are gradually finding their feet, right? As I was saying, that both in our travels and in corporate results, it's evident that those earning below 5 lakhs are finding their feet. And as is also evident, the election results make it very clear to the political class that if you give money to those earning below 5 lakhs, they will actually reward you politically in elections, right? So that story is recovering, but between 2015-16 to 2022, for 6 years, the below 5 lakh constituency really had a very rough time. I think they're going to rise again over the next 2, 3, 4 years, and we're working very hard to find investments around that theme. 5 lakh ke niche kamane wale log. With regards to those earning above 5 lakhs, I think it's a rough situation because ever since Raghuram Rajan did AQR with the banks in 2015, the entire banking system has focused on lending as much money as possible to the middle class. The middle class is up to their necks in debt. If you leave aside secured loans or unsecured loans as a percentage of income, we're amongst the highest in the world, right? So we've created a very indebted middle class. Job creation for the middle class has become a challenge, courtesy AI, courtesy robotization, mechanization. Jobs for the middle class are proving to be tough, and it's not something government can't sort of suddenly announce jobs for the middle class. That's largely the domain of the private sector. And this combination of the middle class being the main tax piggy bank for the government, slowing job creation and high debt, I think is creating a concerted middle class consumption challenge. Ye utna aaram se jayega nahi. This will take a couple of years. We'll need a rate down cycle. We need a 200 bips cut in rates over 2-3 years to ease the pain on the middle class. Unfortunately, what Trump is doing is jacking up the dollar, which makes it very difficult for the RBI to cut rates aggressively. And that's why I think next couple of years, the consumption story tilts away from class back to mass and below 5 lakhs.
So your assessment of, you said services like IT and pharma will be the next big thing. The government has been doing a lot for the manufacturing to come up in across sectors, and with PLI schemes, do you think that's working on the ground as well? Do you see whatever conversations with corporate India, especially in the EMS space, since it's mobile manufacturing has moved into India, we've become an export from an import destination for mobiles. White goods is the next thing. Do you see those companies, because valuations are very high, but do you think that will drive the employment as well and eventually lead to consumption via the PLI schemes across sectors?
Yeah, so look, I mean, you're right. I mean, in mobile phones, in electronics, it's worked, right? And I think listed companies in that space have done very well. They'll continue to do well, is my reckoning. I don't think the government will give up on PLI. They'll try it. I'm not an expert on why it hasn't been as successful in other sectors. It seems to be a raging success in mobile phones, more qualified success in auto, and uske aage there isn't a big success story. Now the challenge here is the job creation needs of the country are colossal, right? So just to put it in context, every year 10 million graduates enter the labor force, and roughly 20 million people enter the labor force, right? Those sorts of gargantuan numbers, right? How do you create 20 million jobs a year, right? Because giving PLIs to mobile phones or medical devices or footwear can't result in that sort of job creation. So the government's PLI scheme has to be lauded. It's an attempt to create jobs. At the July 24 budget, Nirmala ji also announced an internship scheme, where she said, I think BSc 500K companies have to do 5,000 interns per company. It'd be great to hear on 1st February how that internship scheme went. But even there, you can see 5,000 per company across 500 companies. You're still creating a few lakh jobs, not the millions of jobs that 20 million people joining the labor force need. Now, if you sort of do the obvious inference from this, that you simply cannot create jobs on this scale. You have to create an economy where people like us pay taxes, and our taxes are used to give benefits and subsidies and basically universal basic income in another name. I think that realization has dawned on the political class that koi aur solution hai nahi other than to tax people like us and distribute it to poor people. They're trying to do it in a way which doesn't distort the economy. So I think increasingly you'll see benefits or subsidies linked to gender, linked to going to school, linked to going to college, linked to getting your children educated. So they're trying to make it a good dole rather than a laziness wala dole कि घर में बैठ के आप कमाओ. And I think that attempt is also laudable. You're making it a conditional basic income. आपको basic income मिलेगा conditional on ABC rather than saying आपको हम पैसा बरसा रहे हैं आपके ऊपर. But that's the way I think most economies in the world will have to go, giving money to the poor basis the high earnings of the more affluent people.
Right, thanks. Saurabh, one question I have over here for you is, when you mentioned about export-oriented sectors as well, you have Trump 2.0 which is coming. How do you think India has the potential to then integrate further into the global value chain? Because there is a potential tariff war which is already on. Initially, we were talking between US and China. Now, I don't think so. India probably might be spared, might not be spared, right? How do you stride over this kind of a situation now?
So look, I think there are three sectors where I think India will be spared, and those three sectors I think will turn out to be very big. We've discussed one of them already. I think mobile phones clearly will end up being a big sector. Apple is a politically powerful company. Apple is, I think, making $30 billion worth of phones in India. They still make $170 billion in China, and I think that $170 billion, a lot of that will end up coming to India. Beyond Apple, other lesser phone makers will also come to India. So mobile phones is a $400 billion industry. I think iska 100 billion India आना तो बनता है.
Okay.
Right? So that's the first area. I doubt Trump is going to suddenly mess that up. This doesn't make any sense. दूसरा है दवाई, API, active pharmaceutical ingredients. That's a $200 billion global industry. At the moment, we only make around 20 billion.
Correct.
It's improved courtesy last 3-4 years, China +1 initiatives by the Western pharma companies. But if Trump imposes tariffs on Chinese API, that will lead to a massive flight towards India. We've made a lot of money on Divi's lab over many years, and we are staying invested in Divi's lab in the hope that Trump does ramp on.
But do we have the capacity ready to supply that kind?
Much as we saw with iPhones, right? 5 years ago, there was nothing to do with iPhones in India. Apple decided strategically, they sent a team to India. I think between Foxconn or in Bharat FIH and the Tatas, they worked together. The Tatas, I think, this morning I read they bought Pegatron as well. So in India, jab zarurat padti hai, things move fatafat, really fast, right? I reckon we could see a similar outcome on API, right? So it'll be very interesting to watch what Trump does on APIs. As a Divi's shareholder, obviously I'm optimistic that हमको पैसे बनाने का chance मिलेगा. We also invested in some suppliers to Divi's. So there's a company called Ami Organics we own, which is a supplier to Divi's. We also have alkyl amines, which is a supplier to Divi's. So ये हो गया दूसरा theme. Mobile phones, active pharmaceutical ingredients. Third category is medical devices. Colossal industry, same size as mobile phones actually. $400 billion industry. There is a PLI scheme here, but I'm not so sure how effective it is. But natural area for India too. I think we only make $2-3 billion worth of this stuff.
Correct.
Right?
And now I think you have Siemens and the likes which are going very big in this segment.
So I think this is an area where which similar to mobile phones, यहाँ पे बड़ा बन सकता है. And we've invested in a company called Polymedicure in the hope that Polymedicure will supply more and more medical equipment made in NCR, made in Faridabad, into the Western world. Iske aage, beyond these three, right, I struggle to figure out where is our competitive advantage in beyond this thing, right? So there's a lot of hope that jute mein hum kuch kar payenge. There's a big footwear park outside Chennai, but given the labor costs in India are much higher, 3x higher than Bangladesh, I would say higher than Vietnam as well. I'm not so sure how competitive we'll be globally in footwear. Similarly, apparel. Can we become a global exporter of apparel? I don't have a grip on, are we really competitive on land prices, labor costs, and cost of capital to be competitive in stuff which is not dimag wala kaam. Dimag wala kaam, our large workforce of graduates comes into play, right? So knowledge intensive, light manufacturing, we are at our in our element, and I think we'll end up, between these three sectors alone, we'll end up creating $300 billion of GDP.
And that's going to be a good number on that front. But with that, you also mentioned a point about you looking at investing some portion in the US markets, European markets. I'm sure everyone over here wants to understand how should one invest in European and US markets from a operational perspective also, and is it, I mean, are there any further regulations to it? Because I think for a student who's looking at investing, right now the avenues are only Indian markets.
Right. So just to quickly figure out why should we invest abroad, right? Jaye kyun wahan jaye to. So at a very simple level, America has been the most lucrative market in the world over the last 1 year, 10 years. Over 20 years, we are better than them, but over 10 years, they're better than us. And these are the two big markets in the world. Dunya ka 2/3 paisa, 65% of world stock market wealth is created in these two massive free market democracies, right? Now, their market, the Western world in general, has three things our country's market doesn't have. Firstly, they have very high-tech manufacturing. So, for example, all of those phones that you're carrying, inside there's a semiconductor inside the chip. On that chip is lithography. Lithography is the etching of circuit design. So there'll be, say, 10 billion circuits etched on an iPhone 16 chip, right? So the iPhone 16s which are being made in Bangalore area, there are 10 billion circuits on that. There's one company and one company only in the world that can etch 10 billion circuits on a wafer the size of a grain of rice, right? It's called ASML. It's a $400 billion market cap company in Eindhoven in Holland. So the first reason to go and invest abroad is very high-tech manufacturing of the sort our country doesn't have. The second reason is technology as a utility, right? The basic technologies which drive our day-to-day life are owned by the Western world. So simple example being, say, Amazon or Microsoft, right? Microsoft alone will be as large as the Indian stock market, and for obvious reason, very few of us can live a day-to-day existence without using Microsoft in some shape or form. And the third reason for investing abroad is deep luxury stocks, ultra luxury stocks, which are primarily from France and Italy, right? So over the last 25 years, the number of dollar millionaires has gone up every year at 7%. And there's a colossal market now for very rich people to buy very expensive things, right? So for example, handbags costing $40,000, $50,000 are sought after by rich women the world over. Only one company makes those. It's called Hermes. It's listed in Paris, right? Now till 3 years ago, it was reasonably tricky for any Indian to invest abroad. Combination of technology and government liberalization, especially Gift City, has made it much easier. So we set up our office in Gift City 2.5 years ago and started investing abroad. We worked with a brokerage called Interactive Brokers. There are several brokers. Any of you can try to open a brokerage account in the Western world. Opening the brokerage account is reasonably straightforward. If you do it yourself, you end up paying slightly higher taxes, right? Long-term capital gains tax is now the same. The July 2024 budget, Nirmala ji harmonized the long-term capital gains tax regime. It's 12.5 both places. Short-term capital gains tax is much higher though. It'll be lower for you guys because you're students. So short-term capital gains tax is at maximum marginal rate. So if your maximum marginal rate is 0, I would say do foreign investing now rather than when you get to my stage in life where the maximum marginal rate is closer to 40%, right? So for youngsters, open a global brokerage account, right? Several of them, we use Interactive Brokers, but feel free to choose your vendor. And long-term capital gains tax is the same as India. Short-term for youngsters like you will be actually pretty low, right? Now, in our case, because our clients are slightly more grown-up people, we've gone and created a fund structure in Gift City. And from our Gift City fund, we invest into America, Europe, and Canada.
I think we'll be running out of time on the show, but very quickly, let's just take a couple of questions from the audience. The first one.
So I'm Vyomkesh Bhatt. I'm from NMIMS Mumbai. So my question is, in an era of rapid automation and AI, how could the government incentivize industries to reskill their workforce instead of replacing them?
Yeah, I think massive, lovely question here. I think it's a huge task. I can't see how can the government do this. I think the education system in our country will have to be rewired, right? Our education system, and I'm part of it, all of us are, focuses a lot on rote learning. As I think you're already alluding to, AI makes rote learning useless, right? There's no great value in knowing the 16 times cut tables, because soon there'll be an AI chip in my spectacles that will give me 23 times cut tables and 49 times cubby tables, right? So the rote learning wala education, which is what our education system specializes in, is gradually becoming useless courtesy AI. And I think from top to bottom, from kindergarten through to university, I think our education system needs to be revisited. Basically what we have, if you think about it very deeply, challenge is we have a socialist education system in a capitalist economy, right? So the socialist education system simply does not heed free market signals. It keeps churning out students with the same purane zamane ka skill set in an increasingly modern economy, right? Now, should the government be solving that, or should the free market be solving that? As an entrepreneur, I would like to believe that your generation of bright young people will be the free market entrepreneurs who will solve this colossal problem and make a lot of money out of it, right? Because as I think is evident, right, lots of young people are graduating from college, but the reason they're not getting jobs is not because there are no jobs, but because there's a mismatch between their skill set and the job and the skill sets required by employers.
I'm Mihika. I'm an equity research analyst at NDTV itself. My question is more broad-based, in a market where everyone's talking it's overvalued. You just mentioned there's, it may not be a very happy picture for Indian markets in the next few years. For someone who's just become eligible to invest, or someone who's just entering the market, where do you find value? Because, while there are stocks out there that have made returns for other people, their time frame was longer. So how do I, put my strategy forward in a way that a better half of my portfolio is not in losses for the next few years?
Right. So I think the simplest way to think about that is think about sectors which have good companies, but sectors which have been out of fashion for several years, right? The whole area around non-urban India, low-income people, agri-related companies, right, has been out of fashion. And within that ecosystem, there are several good companies. We've invested in Escorts Kubota, but there are other agri-related plays which are high-quality companies. For your generation, for analysts like you, the data is widely available. The annual reports are all available. For journalists like you, you have access to the management teams as well. So there is a multitude of good companies in the agro and non-urban ecosystem. Similarly, whilst IT stocks have now run up considerably, in pharma ancillaries, the ecosystem which supplies ancillaries into pharma, there are several good companies who are waiting to be discovered. And finally, the least fashionable sector for many years was private sector banks, right? And as we discussed, some of the private sector banks are coming back into fashion because they're conservative, strong institutions. So the beauty of the stock market is at any point in time, there'll be things which are in fashion, revved up to high heaven, and there'll be things which everybody has given up on. And as we go through the next couple of years, there'll be some of the darlings of yesterday, say the PSU capex plays. A lot of people will give up on them, but they will take to new darlings. The new darlings will come from, I suspect, the strata of India's economy, which caters to non-urban, rural, and people earning below 5 lakhs.
So do you feel like themes like railways and renewables that had quite of a dream run in the last 2 years would see a slowdown? They've seen correction already. Do you see that will continue, or could we see an uptick?
So as I said, anything around government capex, right? I'm not so sure where the money will come from, right? Given that the government wants to consolidate fiscally, which I think is the right thing to do, if you want to consolidate fiscally, you don't have that much money. So where will you find the money to spend on railways? Renewables slightly different. Renewable private sector companies are doing spending. So if the private sector keeps at it and the government gives tax incentives to the private sector to do the renewable piece, it'll be I think that will sustain. We need to see how, given that Trump has no interest in participating in these global climate accords, if he completely says ye sab bakwas hai and forget global climate accord and we keep getting hotter year after hotter year after hotter year, we'll have to see how our corporates deal with it. Because remember, the promoters in India who are investing in renewables, the promoters who are investing in renewables are doing so with a view to make money. They're not doing charity here. And if the world's richest economy says we have no interest in renewables, the business case gets a little tougher.
So there are going to be challenges coming in for that space, probably on global uncertainties as well. Thank you, Mika. In fact, thank you everyone for joining us as a part of the audience. Thank you, Saurabh, because this was absolutely an interesting conversation for the millennials, for the Gen Zs, I would say, which now we are moving to, I think, alpha and beta very soon. But an absolute interesting conversation with regards to what investors should be doing with regards to budget 2025. Lots more lined up on the other side. Please stay tuned to NDTV Profit.